Hey everyone, welcome back to the channel. If you are keeping an eye on the Canadian economy, you may have heard the news today. The Bank of Canada has lowered its key interest rate by 0.25 basis points, bringing the rate to 3%. But what does this mean for you? Whether you are a homeowner, prospective buyer, or just someone curious about the economy, this decision is going to have a lot of ripple effects, so let's break it down. First, let's talk about the Canadian housing market. You have probably felt the pinch of higher interest rates in recent months, with mortgage rates rising as the Bank of Canada tried to tame inflation. But now, with this rate cut, things are about to change a bit. With interest rates going down by 0.25%, mortgage rates are expected to follow. For many Canadians, this means cheaper borrowing costs. If you are someone who is been on the fence about buying a home or refinancing your mortgage, now might be the time to act. A lower mortgage rate could reduce your monthly payments, making homeownership more affordable. On the flip side, home sellers could see more interest in their listings as more buyers come into the market looking for a good deal. It could drive up demand, potentially stabilizing home prices or even leading to some price increases, depending on the region. For those who already own homes, this could also present an opportunity to refinance and lower your monthly mortgage payments, especially if you have a variable rate mortgage. It's a great chance to save money. Now, let's shift gear and talk about the broader economy. The Bank of Canada's decision to cut a rate is a move to stimulate economic growth. If you are wondering why they are doing this, it's because they want to encourage spending and investment and keep the economy on track. Lower interest rates means that borrowing money becomes cheaper for businesses. This is great news. It means they can take out loans for expansion, hiring, and new investment at lower cost. This could help boost job creation and encourage companies to invest in new projects. For consumers, cheaper credit could lead to more spending. You might be more willing to take out a loan for a big purchase like a car or home renovation, or use credit money more freely for daily expenses. This kind of activity, more consumer spending and business investment, helps keep the economy moving. If Canadians are buying more goods and services, it supports growth across various sectors, from retail to manufacturing. However, there's a balancing act there here. The Bank of Canada will be closely monitoring inflation, as lower rates can sometimes lead to higher inflationary pressure, and a weaker Canadian dollar, for instance, could make imports more expensive. and that could cause inflation to rise in certain sectors. While the rate cut may encourage spending and investment, it could also lead to Canadians taking on more debt. If you're not careful, it could result in over leveraging, where people take on more debt and then they can comfortably repay, which could become a problem down the road. And for those who are already struggling with high levels of debt and new borrowing, even at lower rates, might still be tough to manage. It's important to keep a close eye on your finances. Also, if inflation stays high, the Bank of Canada might have to raise rates again later to prevent the economy from overheating. So, while the current rate cut is intended to help the economy, it's a balancing act. Looking ahead, this rate cuts shows that the Bank of Canada is still trying to support the economy while keeping inflation under control. But with so many factors at play, like inflation, housing market trends, and global economic conditions, it's important to stay informed and adjust your financial strategies accordingly. So, what do you think? Will this rate cut help boost the housing market, or is it just a small change in the grand scheme of things? Let me know in the comments below, and don't forget to like, subscribe, and hit that notification bell so you don't miss out on future updates on real estate, finance, mortgage, and the Canadian economy. Thanks for watching, and I'll see you in the next video. Bye for now.